Thank you so much for joining us. Now, what we said that we would do is we'll have a look more about the decentralized finance part of things. And then the follow-on panel, we'll be looking at the metaverse and NFTs. So it would be wonderful if we could, first of all, have an introduction. So we've set plenty of time on these panels so people can get to know you, because DataTjej is about helping girls and women through their career journey and educational path within IT and within tech. So I think it's really interesting to understand where people's backgrounds have come from, where they've lived, where they've been, what's attracted them to them, how they managed to get into the space, as well as what's happening in the space as part of that story. And then we're also going to have opportunity for questions and answers, which we can take at the end. But please, everybody, as you have done, sort of just do put in the chat and raise your hand. So Sekayi, let's start with you. Can you give people a little bit about your background, where you've been, and how you came into the space and what that looks like for you now?
Sure. Thanks, Bridget. Hi, everyone. I'm Sekayi. I'm a Director of Partnerships and Investments for Energy, which is a security-focused blockchain with a DEX, and also launching an NFT collection this quarter. My background is in management consulting, IT product development, and banking. I'm an NAD, board advisor, startup mentor, and angel investor. And I got into the space through angel investing in pre-seed IDOs, and also through contributing to DAOs.
So thank you very much. We have covered a DEX. A DEX is a decentralized exchange. We spoke about that on the last one. We did mention an IDO, which is initial decentralized offering. And we did touch on a DAO, but we didn't really sort of explain what a DAO is. So would you be kind enough to give a very brief overview, so that when we mention DAOs, people can sort of have an understanding of what we're talking about in that space?
I'll do my best. So a DAO is a decentralized autonomous organization, and it's basically run by the community. Inside the DEX, it's divided into tiers. So there's some people who are more knowledgeable than others. And so for the new folk coming on, there's someone to onboard you, hopefully if you're not the first person on, and to just provide you with the tools that you need to use, particularly if you're working for a DeFi, a DAO, like I do, and also to help you with the mindset shift that you need to make from working in a centralized organization into a decentralized organization. So things like getting used to being able to make decisions, moving your mindset away from the power structures, and being able to take initiative and working more collaboratively in closer collaboration with your colleagues. But yes, the DAO that I belong to is completely anonymous. So everyone has an avatar. We do speak to each other very, very frequently, but don't necessarily know each other on a personal basis, which isn't always the case in other DAOs, but I don't work very deeply with those.
Amazing. And I'd love to touch more on throughout this whole journey that we're doing this evening about the change in mindset and the change in culture, and sort of unlearning what you've learned within that space. But thank you so much for that introduction. Mona, we'd love to hear your story.
Thanks, Sekayi, for the intro. Also interesting for me to hear. Yeah, so I'm Mona. I work for a venture capital fund that is based in Germany. We only invest in blockchain and crypto startups. even more focused specifically on decentralized finance, DeFi, and infrastructure players in this. My journey is a bit, yeah, I would say broad, maybe a little bit similar like Sekayi, done many different things. I also was a consultant, a strategy management consultant for 4 years, then went into the startup world, did the country manager or managing director role for a education technology startup based in Germany. Thereafter founded a little food tech startup based in the United Kingdom. Did an MBA, really a cool global MBA at INSEAD University, where I got to spend some time in Singapore and in Paris. And then actually joined Bitwala, which is now called Nuri. It's a German neobank with a crypto exchange in Berlin. And due to personal interest in crypto and blockchain technology, doing some really interesting courses like the DLT Talents or DeFi Talents courses, also, geared towards women, the DLT one. So really interesting, and just kind of gained more and more knowledge, started to go to conferences, and invested more and more myself, small little tickets, but just kind of to understand how the market works, and ended up through this, I would say, personal interest, and also obviously working at Nuri, at Tokentos, which is the venture capital fund's name, Tokentos Investments, which I really love. So I really wanted to do venture capital for a while. Thank you, Bridget, for posting that. That's a really good link for you if you're interested, or you can ask me questions later as well. Bridget also knows a lot about DLT Talent. But yeah, so I really, really enjoy working with young startups. We invest mainly seed or Series A, so a little bit later, but still in early stages of the startups. I get to speak to amazing young founders, or in terms of the ventures are young, and just really, really exciting to be part of the space. So yeah, looking forward to chatting to you today about how we invest in DeFi in general, and having this discussion.
Amazing, thank you very much. And Maria Phillips, I believe that you've managed to join us. Are you there? Where is Sakaya?
Hello, can you guys
There
hear me
you
okay?
are. We can.
Hello.
Thank you very much. I know that you everyone has a jam-packed day. So let me just set the scene for 2 seconds for you, so that you understand where we're at. So we've had a panel setting the scene on sort of the foundationals and how various Chloe Diamond, Jean-Pierre Brevet, and Naomi Oba came in. And now we're looking at what does the DeFi side of things look like. So part of the point of the event is for DataTjej's audience to be able to understand what people's backgrounds were, what got them into the sector, what they're interested in, as well as learning about the sector itself. So we would love to hear a bit about your journey as to where you've come from, what got you interested, and what you're doing in the space, please.
Sure. So, well, hello everyone, and sorry I was late. So I started off 15 years as a practitioner in accounting, risk and compliance. I definitely put my teeth in banking, traditional financial services, but risk and compliance, not everyone dreams of doing that when they grow up. And I'd always wanted to work in technology. So about 5 years ago, 2 directives came out from Europe. One was GDPR, which we'll all have heard of, and then the other one was MiFID. And I decided that I didn't want to work in traditional financial services anymore. I wanted to work in technology that would make it safer, would make it easier. So I started to work in Fintech and in RegTech. And I now work with DeFi and crypto platforms, helping them use technology to meet the regulators' expectations. And I love it. Like, I genuinely love it. Working in a bank is really, really tough. Working at a technology company is much easier. Olivia. Much, much nicer. Olivia, anyway.
Yes. Excellent. Thank you very much for that. So I think we'll set the scene. Sakaya, are you happy to sort of set the basic scenes of DeFi What does it mean? What are some of the terms? What are we talking about? And if someone wants to sort of get involved, how do you start to get your fingers in the pie, as it were? And then we'll sort of go from there.
Sure, I'll take a stab at it. Before I start, it's probably worth saying that, none of this is financial advice. This is a high risk, unregulated space, and, you're responsible for educating yourself, doing your own research, and being safe. So DeFi, I would say, is just a financial ecosystem that's based on blockchain technology. And you can do many of the things that you can do in traditional finance or CeFi. It's just much, much higher risk and a lot less to no regulation. So you can exchange through swaps, just like how you would exchange currency. You can exchange cryptos, you can do borrowing and lending, but it's much, much higher in astronomical, in some cases, ridiculous interest rates. And the main tenet or the main difference between the centralized and decentralized is that there is no middleman. And basically the code is king and the devs behind. There are other principles which are not just focused on blockchain, but also focused on DeFi, but also apply to blockchain, which many of you have heard of: immutable, trustless, the P2P, and the proof of work and proof of stake also apply here. So yeah, that's it in a nutshell. There's no central bank and there's no regulator.
So you've touched on some new terms again. We didn't sort of mention that in the blockchain 101. So you'll be grateful each time you pick up a new term. I'm going to ask you to have a stab at giving it some sort of one or two sentence explanation, if that's possible. That would be great. So the immutable side of things, meaning obviously that once the information has been recorded, it can't be changed.
That's the idea. Obviously, it might come as a surprise to some people because of all the hackings, but the original intention was for it to be immutable.
Indeed. And then you talked about, what else did you say? You talked immutable, proof of work.
P2P.
Yeah,
so that's a transaction that's person to person, so direct between two people without a middleman. So there's no bank, there's no card issuing agency. It's just two people interacting with each other. So that's basically a computer trying to solve a very, very complex calculation, and the first one wins. And a block is created and a reward is given to the developer or the person who the node. I don't know if you talked about those either. I didn't want to take myself down.
I know. You're like, what do I say? Node was mentioned, but we left node. So node is something in the network, isn't it? So it can be a person or a machine, but mostly when we're talking about blockchain, it's computational nodes that we tend to be, or machines that can do computation that we tend to be talking about. Yes, if anyone has got any questions, please sort of say if you would like, if there are some questions around to some of the words and the messaging that we're talking about, as well as sort of the individuals and their history and bigger topics as we go through. We would love to hear that. So yes, so the broad sense of decentralized finances now that, and this is certainly what's happened over the last 18 months to 2 years, is that you can start to do things with finance in the centralized world that you can do in the centralized world, like lending and borrowing and those sorts of things. Would that be a simple way of talking about?
Yes, and it's called farming and staking for those that might not have heard of the DeFi terms.
Amazing, thank you very much. So how would someone get started? What does that look like?
There's so many different entry points, and it also depends somewhat on your age, who you know, and how you might get involved. A fun way is through gaming. Another way is through seed investing in IDOs. So that's in very early stage projects before they actually launch the token. And as they progress in their life cycle, you can still get opportunities to invest, but obviously the rewards are reduced. You can contribute to a DAO. So, you might start with very small tasks and then, get more and more involved. Sorry, I actually forgot to mention, when you do get involved in some of the IDOs, you can actually contribute further through governance and voting, through using your tokens. Or you can hodl, so you can buy and sell different cryptos, study them, see what captures your interest, see what's doing well. You can trade, and as you learn more, you can do more and more complex things, like you can run bots and do things like play to earn. So there's quite a wide variety there for people to get involved.
And it's not necessary that you have to buy your way in, is there? So when you spoke about the DAOs, the decentralized autonomous organization, that's a way that you can earn your way in, right? So you can say, what's my skill set? And it doesn't have to be technical, isn't that correct? So it could be whatever. Just think of an organization, what skills are required in that organization. If there's a DAO that you like the look of, you can, rock up and say, I have this skill set. I'm going to say that I'm going to do this task. We understand if everyone says I do the task acceptably, then this is the reward I'll get. And then so you can start to get your tokens that way that you can then choose to.
That's correct. So you mentioned Medium earlier, and there are quite a lot of people that write on Medium that come from some of these DAOs and some of these DeFi solutions. And, they are journalists or content creators, and, that's how they get in. But you do need to be patient. You don't always get paid as soon as you walk in the door or for your first task or first 5 tasks. You have to build trust.
And it's not just DAOs that allow you this opportunity to earn as you go along. So we mentioned before protocols, we mentioned before Layer 1 protocols, etc. And these protocols want people to understand them, to share the education. They want them to be able to help build on the ecosystem. So they have bounties, isn't it correct, where you can earn that way as well?
Yes, so that's a really good way. And also, if you are more technical, you can also get grants. So there's quite a large culture of building applications on different protocols through grants-based rewards.
So I've just shared in the link the Oasis Protocol for the Ambassador Program. The Ambassador Program is for non-technical. It's for people who want to learn about the protocol and then share their learnings, maybe manage some communities, etc., etc. You'll also see in there they have something called Bounty, and that talks about the rewards they have for those who are developing on a technical basis. And the other thing that I do want to mention in terms of everything that Sakaya is sharing is, if you are looking to build an application, if you are looking to build, rather than going straight into that, there are opportunities to go into hackathons and join teams. When so it might be you, it might be you already have a team, or you might have some of the team. You can go into a hackathon, you can have a look at the types of hackathons that are out there and see which one meets your best skill sets and your interests. And then the hackathon is the competition where you could be awarded a grant if you win. Also, it could be a great acceleration of your learning, so that then it gives you enough of an idea of an application that you want to build, which you can just apply for a grant for. And I will be sharing after this lots of communities that support women in being able to do all of this. Wonderful. Thank you so much, Sekayi, for sort of laying the foundations. It's helped to make it a lot easier for me to understand what DeFi is. Maria, can we go back to you? Because in the traditional financial world, we have gone through the idea of penny stocks and the Wild West, and now we have everything regulated. Can you tell us from your point of view what the importance of regulation is, and what does it look like, and how much is it needed in our DeFi world?
Okay, well, I can draw a comparison to what happened this morning, what notification I got from my Coinbase, saying that basically my Solana shares had taken a tank and I may lose all my money. That would never happen ordinarily in traditional financial services. You'd have to have a serious bust for that to happen. But it's, it is far more destable, and therefore you have a higher risk of losing all your money. And if you go in and you start working, or you start using crypto or investing in crypto, that is something you need to be aware of. Hugely aware of, because the regulator is starting to regulate in this space, but he or she hasn't quite got there, but it's coming big time for crypto, unfortunately. And therefore, all these regulated entities are now going to start to have to get regulated properly and get licensed properly. So it's a good thing for crypto, but definitely I think I suppose the traditional financial services always had, you have a bank account that's managed by the bank, whereas here you're managing your own account, and that's what leaves you at risk. Does that make sense?
Multitasking, yes, you're multitasking very well indeed. So what are the practical steps? Can you give sort of shape and fill in some of that story, what that might look like, so if people are interested in those roles, what could that look like? What do you see that the industry might need? You're doing it from a technical perspective, aren't you? You're finding the technical solutions to help.
Sure. So traditional financial services is way too big for them to change, right, and use technology in risk and compliance, whereas fintechs have a really small jurisdictional footprint and a really small product and service profile. So actually, they could just completely, 80%, fully enable it with technology, which is really interesting, which is why I'm loving working in fintech right now, and we're making a huge difference, because financial detriment as a result of these products and services is what the regulator is going to try and stop happening. So, I mean, you can't change that. That's going to happen. So why not use technology to meet it, if that makes sense?
Absolutely. Well, we're using technology to solve other problems. So it makes complete sense to be able to use technology to solve on regulations as well. Mona, just how long are you in the taxi for, Maria? Should I ask Mona and then come back to you for a few?
Maybe ask her one question. I'll just move out of the taxi so that I'll be a bit quieter.
Yeah, so you're a VC, you get to see an awful lot of these companies, their ideas, where they're at, how well they have been doing. Can you give us a sort of an overview of what you find interesting in the space, and what you think, we would find interesting to see the problems that are being solved, what the teams look like, how they're going about it?
Yeah, sure. I mean, in general, like was said earlier, we have in the DeFi space. So as I mentioned, we focus really primarily on decentralized finance investments and infrastructure players. So like said, we're looking at companies that are essentially helping all of us as retail investors, potential retail investors, how to figure out how to earn more interest, how to borrow, how to lend, how to buy insurance, how to trade derivatives, how to trade any other assets, in this global peer-to-peer decentralized mechanism, right? And there's so many different ways that this has been done. But I think in general, what we do look for when we're looking for investments is there really a problem that this is a solution for, right? So is this really fixing something that needs fixing? Or is it innovating something that hasn't been there? And that point is actually often in relation to mass adoption support, right? And helping all of us, be able to navigate easier through this ecosystem, because all of us who have tried to dabble in the DeFi space probably would agree with me that it's not super easy. And you have to move money from A to B. You have to make sure you put in the right addresses, otherwise you can lose money. You have really high gas fees. There's bridges, there's security problems, all these, things you read about in the news. And when you're actually trying to navigate it yourself, you're like, what? I was just trying to, enter with, I don't know, 50 pounds, but the gas fees are so high that I can't do that. I actually, my gas fees are higher. So those are real life problems that we all experience, I'm going to assume, when we go and try and learn about DeFi or play in the space, obviously at your own risk and with a lot of research that you have done before, but you know what I mean. So what we're looking for in investments is really companies that help ease that path and make things easier, more able to be adopted, more clear, better education for people, and generally making it really doing what decentralized finance is supposed to be doing, which is taking out the middleman and enabling everyone to be banked, enabling everyone to earn money, enabling everyone to enter this financial services world, no matter what their background is, where they're from, or how much wealth they bring into the system from day one. And I think that's really actually a very good, positive, and an altruistic underlying, need and basis for decentralized finance, but we're not there yet, right? We have a long way to go. Right now, I still think if you're not techie, sometimes it's really hard to navigate that space, and you have to invest a lot of time and really do your own research. And we all know that it's not that easy for us to do that, right? We don't have so much time in the day a lot of the time. I do this for a living, but when I wasn't, I was doing this at night, trying to learn about it, and it's really time consuming. So again, just to answer your question, I think what we look for is infrastructure players or decentralized finance players that are helping to make this something accessible by everyone, making it transparent and making it fair, and of course, very importantly, making it secure, and kind of overcoming, hopefully, a lot of the problems that we are seeing today and in recent weeks, with a pretty scary market situation that we're looking at right now.
Very painful, yes, very painful indeed. So you managed to touch on the word gas, which we haven't mentioned in the call yet. So can you just explain when you said gas expenses, what do we mean by gas, apart from it's very expensive?
So basically, when you're doing a transaction on the blockchain, right? So you're, for example, I would like to send some Ethereum to you, Bridget, right? Because
thank you very much.
Because I thank you for all the work you do to help ladies in the space gain knowledge and access. I can sadly not just send you the amount I want to send you, but the transaction kind of costs me something. And that is due to the fact that computing energy is required to validate that really I am sending this to you, right? It needs to be validated. So it's not a person that's checking bank account, Mona Tiesler, is now sending it to bank account Bridget Greenwood, but it's essentially a computer, right? A smart contract that is now validating the fact that I'm sending this to you. And it's also making sure this transaction is processed on the blockchain for everyone to see, and that it's kind of real, it's true, it happened. And this requires energy. And this energy is gas, so to speak, kind of thinking of it like fuel in your car, gas fuel, that you need in order to make sure that this verification happens. So it's really a payment that you need to make in order to pay for the computing energy that is required. So it's yeah.
And your fuel analogy there, is it also true that the gas fees can change and they can go up and down depending on how busy, you know, the highway is on the transactions that are being generated?
Yeah, that's a very fair point. So it's not just if we're looking at that analogy, the kilometers or the miles that you're driving, it's also how many cars want to drive the same route as you or on the same highway as you at that particular time. So yes, gas fees actually vary quite a bit. Also, you often see it when, you know, big announcements are made in the space, or something very impressive is launched, a project that everybody wants to get in. Or like right now, people want to get out, and there's more movement, more interest, more people transacting on the blockchains at the same time, and that increases the gas fees. So often what I do, if I have the time, I do kind of look and check if it's really, really high gas fees. And then if I realize, oh God, that I cannot afford that, I don't want, then I kind of come back to the transaction I want to make at a different time. Maybe if I'm still awake, like 1 a.m. UK time, instead of like, you know, I don't know, midday when I have my lunch break. So that's something you obviously can consider when you're looking at gas fees. But you will also note, and then I'll shut up, that some blockchains have higher costs, gas fees, than others. So if you kind of transact with Ethereum, which obviously most decentralized apps are based on, and it's quite a popular blockchain to use, then perfect. Thank you, Sekayi, for the Etherscan gas tracker link there. Very useful. You can see that the gas fees are higher. If you look at some other blockchains like Solana, or a layer 2 blockchain or sidechain like Polygon, which is a layer 2 blockchain from Ethereum, which is essentially there to make transactions A, faster, and B, with less gas fees. So now it gets complicated, I won't go into that, but long story short, not every blockchain will have the same gas fee costs from the transactions that you're doing. And a lot of them compete with each other in the sense that they're saying, hey, we're better than Ethereum because our gas fees are lower, so you can transact with us for cheaper money.
Amazing. So can we just take a step back, because this wasn't something that I knew. I don't think it's general knowledge when we're talking about finance. So why is financial access and the ability of everyone to get involved and be able to sort of invest at any stage, why is that important? You know, where is the greatest risk? Where's the greatest reward? Can we talk about that a little bit? And then as you're talking about those stages, can we just say what the industry calls them? So we've mentioned pre-seed and seed before, but if we can sort of attach the stage and the risk and reward potentials to those stages, that would be quite interesting, I think.
Sorry, I don't think I fully understand the question.
Okay, so well, I'll set up in terms of, in a regulated environment, in a fully regulated environment, it's very difficult for someone to get invest in a company at a very early stage. They have to be deemed by the regulator as someone who either is wealthy enough to do so, and that's largely the measure of it, or educated and wealthy enough to do so, which I don't think is necessarily the right rules of venturing. So now we have decentralized finance. So we've mentioned about the ICOs and we've mentioned about the IDOs. They are the possibilities for people with a much lower entry point to be able to get in at an earlier stage. So then I was asking you, Sarah, if you could talk about what the names of the early stages are called and what the risk and reward of being able to get in at those stages could be.
Right. Sorry, that was my not clocking on quickly enough.
Sure, if you didn't understand it, nobody else did, so that's great. I got your
no, so absolutely agree, right? I mean, I would say most people are not able to invest in early stage companies. So, you know, if someone has a phenomenal idea, say like Jeff Bezos with Amazon or whatever, right? And you're like, ooh, I would like to put in £100 or €100 or $100 into this. I only have that, but I think that this is going to be great, right? Nowadays, you can't do that because there's big venture capital funds, which have a lot of family offices or high net worth individuals that are regulated, checked, that are allowed to essentially provide financial fuel to venture capital funds, and then they invest it. And it kind of leaves all of us out of the picture that are not able to access this type of, you know, investment vehicles. But with decentralized finance, or with this whole, well, token economy, let's say, we all now have the opportunity to pick out projects that we like because we think they're very valuable and needed in the future. And this could be, you know, whatever it may be. It could be a supply chain to track food, or it could be, you know, decentralized finance protocols that ensure that you can borrow and lend money easily. Whatever you're interested in, wherever you do your research and you say, this is a project I want to invest in, you can now do that by buying your €100 worth of tokens for that investment, and hopefully see how this company grows and participate. No matter, you know, you don't need a middleman, you don't need someone to invest for you and allow you that privilege. You can choose to do that yourself. So that's the cool thing with tokens. In terms of stages, so usually we have often companies or startups, they first do a friends and family round, which is usually, you know, for your, I don't know, maybe your niece or something comes to you and says, hey, I have this great idea, you know, do you want to put in €5,000 or something to get me started? And you believe in that person and that idea, and you put in money, but it's often not, you know, open to everyone. Then usually comes a pre-seed round, which is then often opened up to institutional investors like myself in a venture capital space, or also sometimes these are now in this DeFi space, or in this decentralized space, tokens, right? So some people have tokens often that they then launch in the market, and you can invest in those really, really early. Usually there, the project doesn't even have the technology fully developed. They have a good idea, they have a roadmap, they have a pitch deck, but they need the money to start. Then a seed round comes. A seed round is usually when there's a little bit more, there's a few team members, we've got some traction, maybe, not always, but it's often, and we have a more formulated idea. People using a beta testing phase, maybe again, you can invest in tokens, or institutional investors are often allowed to get in there to also get equity potentially, so actually shares parts of the company. There's two ways in this world. There's these tokens which we can all invest in often, or if it's already launched into the market, or there's also equity, which is still often only available to, you know, VCs or family offices or angel investors. But most of us probably want to invest in the tokens. Again, we need to make sure though that we understand what the project is doing. So we can do that in a seed round. And then there's Series A, Series B, Series C, and these are the later stages when the company is already a lot bigger. The upside of investing in earlier stages, like a pre-seed or a seed stage, is that, of course, everything's cheaper. The tokens are going to be cheaper. There's more upward potential. So if the company skyrockets, you have a higher chance of being part of that journey, of that upside. However, you also have a much higher risk of losing all your money, right? Because there's not a lot of data, there's not a lot of financial numbers, there's not a lot, even tech that you can look at to help you realize, is this actually going to work, right? So it's a conviction bet you're making. So the risk is very, very high, and you need to be very, very aware of that, right? And that's super, super important, because even now with the Terra situation, for example, you might end up not, everyone says, oh, Terra and Luna, great project, amazing. And you just put your money in there and you haven't actually understood how Luna or how Terra actually works, then you might be in a position right now, which sadly a lot of people are, that have lost a lot of money. And that's really, really sad. And I've heard very, very sad things in that respect. So it's just a very good, sad example, but it's a very good example to make you aware that it's very, very important to not blindly follow what people tell you and invest money because you think, oh, it's going to be 100 times return and I'm going to be rich in 2 years. But it's really about understanding what the project does and how it works. And if you don't understand, then ask about it. And try to figure it out, and not just blindly, what we say, ape in to projects that are not, that you don't understand, or that don't really make sense.
Thank you very much. Sorry, Sakaya, if you would be kind enough just to sort of go over some of those.
So the question was from Louise, and it was, what are good
Yes.
resources to read up on buying and selling crypto? And I just put the two big price tracking sites there, or aggregators, which is CoinMarketCap and CoinGecko. And basically you'll be able to see lists of all the different weird and wonderful cryptos. At any one time there can be 3,000 to 5,000 of them, and you can see which ones are in the top 100, top 500, things that you may or may not want to invest in. And they should be quite a bit of information, including links to their website. You can have a look at their teams, maybe even join their Telegram or Discord to find out a bit more information. But again, you need to be safe when you're in that ecosystem. And the second lot was the ETH gas station and Etherscan gas tracker, when Mona was explaining what gas fees were, which are, I guess, more specific to proof of stake coins. And you can actually see how much it's going to cost you before you start the transaction. And you can also compare gas fees from different protocols on these.
Amazing. Thank you so very much. You're welcome. Yes, no worries at all. Thank you so much for our second panel. Thank you very much for everyone who is still listening, and hopefully we're providing you wonderful value and insight. I know that I'm continuing to learn all the time from these incredible ladies.